Crypto revolution, Trump's new order fuels $200 billion digital asset market growth as SEC repeals SAB 121. Date, January 27, 2025. Overview. On January 23, 2025, a seismic shift occurred in the U.S. digital asset landscape when President Donald Trump signed an executive order titled Strengthening American Leadership in Digital Financial Technology. This pivotal action coincided with the repeal of the Securities and Exchange Commission's SEC Staff Accounting Bulletin 121 SAB 121. Heralding an era of renewed optimism and growth in the cryptocurrency market. Analysts anticipate this regulatory overhaul could catalyze a staggering $200 billion expansion in the digital asset sector. Key components of the executive order. 1. Creation of the President's Working Group on Digital Assets. The executive order establishes a working group aimed at reassessing existing regulations and proposing a comprehensive federal regulatory framework for digital assets. This group will include representatives from key financial regulatory bodies such as the SEC and the U.S. Department of the Treasury. 2. Fostering innovation in digital assets. The new administration's emphasis on digital assets as vital for innovation and economic development marks a stark contrast to the previous administration's focus on regulatory risks. The order promotes the responsible growth of digital assets while discouraging excessive governmental oversight. 3. Support for stablecoins and prohibition of CBDCs. Trump's directive endorses the use of dollar-backed stablecoins, ensuring the U.S. dollar's continued dominance in the financial landscape while explicitly banning federal agencies from pursuing the establishment of Central Bank Digital Currencies (CBDCs). 4. Repeal of SAB 121. The SEC's repeal of SAB 121 removes a significant barrier for financial institutions which had been required to classify crypto assets as liabilities on their balance sheets. This change is expected to enhance the participation of traditional financial institutions in the crypto market. Immediate market reactions. In the wake of Trump's executive order, the cryptocurrency market witnessed a remarkable surge. Bitcoin in particular skyrocketed to record highs, reaching approximately $109,000, an increase of over 50% since Trump's election victory in November 2024. This upward momentum reflects heightened investor confidence fueled by the new regulatory environment. Reactions from industry leaders. Industry heavyweights like Coinbase CEO Brian Armstrong and Binance CEO Richard Tang hailed the executive order as a watershed moment for the crypto sector. They expressed relief at the departure from the previous administration's restrictive policies which had stifled innovation and growth. However, concerns emerged regarding Trump's personal ventures into meme coins, which some industry observers criticized as potentially damaging to the sector's integrity. Timeline of events. January 20, 2025, President Trump pardons Ross Ulbricht, the founder of Silk Road, signaling early support for the crypto community. January 23, 2025, Trump signs the executive order promoting digital assets and repeals SAB 121, marking a fundamental shift in U.S. digital asset policy. January 24, 2025, the SEC formally rescinds SAB 121, eliminating significant obstacles for financial institutions. January 25, 2025, Bitcoin's price surges in response to the newly favorable policies, reflecting a positive market sentiment. Common and divergent themes in coverage. All sources emphasized the dramatic shift in regulatory approach under Trump's administration, highlighting the potential for significant growth in the digital asset market. The repeal of SAB 121 is noted as a crucial development that could unleash traditional financial institutions' participation in the crypto space. However, opinions diverge regarding Trump's family involvement in launching meme coins, with critics arguing this undermines the legitimacy of the broader cryptocurrency sector. Conclusion. President Trump's executive order and the repeal of SAB 121 represent a critical turning point for the digital asset industry. This new regulatory framework is poised to unlock significant opportunities for innovation and investment, potentially reshaping the financial landscape. However, the implications of Trump's personal ventures into the crypto market raise questions about regulatory integrity and the motivations behind certain market actions. As the digital asset market evolves, stakeholders will be closely monitoring the developments and their long-term impact on the industry. The content reveals several counterintuitive aspects surrounding the crypto revolution initiated by Trump's executive order and the repeal of SAB 121. 1. Political support versus industry skepticism. While the crypto industry largely celebrated Trump's executive actions as a boon for digital assets, there was notable skepticism regarding his involvement in meme coins. Critics within the industry questioned the legitimacy of Trump's and his family's launch of meme coins like $Trump and $Melania, which they viewed as potentially undermining the credibility of the broader crypto sector. This juxtaposition highlights a complex relationship where political support does not necessarily equate to trust in individual actors within the industry. 2. Immediate market surge amid regulatory changes. The expectation of a $200 billion growth in the digital asset market following Trump's reforms was met with an immediate surge in Bitcoin prices, which rose significantly after the announcement. However, this rapid increase raises questions about market volatility and investor behavior, suggesting that optimism can be easily swayed by political developments regardless of underlying market fundamentals. 3. Rejection of CBDCs. Trump's executive order explicitly prohibited federal agencies from establishing or promoting central bank digital currencies (CBDCs), which contrasts with the growing global trend of central banks exploring digital currencies. This decision may seem counterintuitive given the increasing interest in CBDCs worldwide, suggesting a divergence in U.S. monetary policy compared to other nations that are embracing digital currencies as a means of modernization and control. 4. Regulatory clarity versus previous restrictions. The establishment of the President's Working Group on Digital Assets aims to streamline and clarify regulations for digital assets, sharply contrasting with the previous administration's approach, which was more focused on risk and regulatory scrutiny. This shift in tone indicates that regulatory clarity can be achieved through political will, but it also poses risks as the industry may rush into unregulated territories without the necessary safeguards. 5. Pardons and market sentiment. The pardon of Ross Ulbricht, the founder of Silk Road, was a significant political statement that coincided with an overall pro-crypto narrative. However, it also raises ethical concerns and questions about the implications of endorsing figures associated with illicit activities in the crypto space. This duality complicates the narrative around legitimacy and regulatory oversight in an industry already grappling with issues of trust and compliance. 6. Financial institutions' response. The repeal of SAB 121 was intended to facilitate traditional financial institutions' entry into the crypto market. However, the skepticism from executives at major banks regarding their ability to adopt Bitcoin as an asset reflects a lingering mistrust in the crypto ecosystem. The rapid regulatory changes may create an environment where banks are eager to participate but remain cautious due to the historical volatility and reputational risks associated with digital assets. 7. Market manipulation concerns. The rapid rise and subsequent decline of Trump's meme coins $Trump and $Melania post-launch indicate potential market manipulation or speculation rather than genuine investment. The fact that the Trump family could profit from these coins brings into question the ethical boundaries of political figures engaging in market activities that could be perceived as conflicts of interest. These counterintuitive elements indicate a multifaceted and often contradictory landscape in the crypto sector where political actions, market reactions, and ethical considerations intersect in complex ways. The report on President Trump's executive order regarding digital assets and the repeal of SEC's SAB 121 carries several significant implications that many readers may overlook. Here are key aspects of the report that warrant deeper consideration. 1. Formation of the President's Working Group on Digital Assets. The establishment of the President's Working Group on Digital Assets is pivotal as it signals a shift towards a more coordinated federal approach to digital asset regulation. This group is responsible for reviewing existing regulations and proposing a comprehensive federal framework. The significance lies in the potential for streamlined regulations that could facilitate easier entry for traditional financial institutions into the cryptocurrency market. This could lead to increased legitimacy and stability within the sector, encouraging more institutional investment. 2. Reversal of SAB 121. The repeal of SAB 121 is a critical moment for the crypto industry. Previously, this rule required financial institutions to treat crypto assets as liabilities, creating barriers for banks to offer custody services. By repealing this rule, the SEC has significantly lowered the regulatory hurdles that have kept major financial players from fully engaging with digital assets. This change could catalyze a wave of institutional adoption as banks and financial institutions may now feel more secure in offering cryptocurrency services, potentially leading to greater market liquidity and stability. 3. Emphasis on dollar-backed stablecoins. Trump's executive order explicitly promotes dollar-backed stablecoins while prohibiting the establishment of Central Bank Digital Currencies (CBDCs). This stance is significant as it aligns with the goal of maintaining the US dollar's dominance in global finance. Unlike CBDCs, which could introduce new regulatory complexities and centralization, stablecoins offer a more decentralized alternative that maintains the dollar's value. The implications of this could reshape how people interact with digital currencies, reinforcing the traditional banking system while allowing for innovation within a regulated environment. 4. Impact on market dynamics. The immediate surge in Bitcoin prices following the announcement reflects a broader sentiment of optimism within the crypto market. However, this reaction may overshadow the underlying structural changes prompted by the executive order. The potential for increased institutional investment and regulatory clarity could set the stage for a more mature cryptocurrency market characterized by greater investor protection and a reduction in volatility over time. The reaction to Trump's policies indicates a shift in market sentiment that could lead to sustained growth beyond speculative trading. 5. Concerns over personal involvement in meme coins. While the executive order and repeal of SAB 121 are lauded by many in the crypto industry, Trump's personal involvement in launching meme coins $Trump and $Melania raises significant ethical questions. Critics highlight that these actions could undermine the legitimacy of the broader cryptocurrency industry, which has struggled with perceptions of fraud and speculation. The juxtaposition of presidential policy aimed at fostering innovation alongside personal financial ventures in a notoriously speculative market could damage the credibility of the administration's commitment to a legitimate crypto ecosystem. 6. The broader political implications. The political ramifications of this executive order extend beyond crypto. The strong stance on digital assets contrasts sharply with the previous administration, suggesting a broader ideological divide regarding innovation and regulation. This could influence upcoming elections and the political landscape, particularly as the cryptocurrency sector continues to grow. Stakeholders in the crypto community, including major investors and companies, may increasingly mobilize politically to support candidates aligned with pro-crypto policies, potentially reshaping political alliances. 7. Long-term regulatory evolution. The report indicates that the new regulatory framework under Trump's administration aims to embrace digital assets responsibly. However, the effectiveness of this framework will depend on the engagement of the working group and how it navigates the complexities of digital asset regulation. Future regulatory developments could either foster a conducive environment for innovation or introduce new challenges, particularly if the political climate shifts again. The long-term trajectory of cryptocurrency regulation in the U.S. will likely hinge on the balance between innovation and consumer protection. Conclusion. In summary, the report on Trump's executive order and the repeal of SAB 121 highlights transformative changes in the digital asset landscape in the U.S. While the immediate market reactions are significant, the broader implications of regulatory changes, ethical considerations, and political dynamics present a complex picture for the future of cryptocurrency in the U.S. Stakeholders will need to navigate these waters carefully to ensure the growth of a legitimate and stable digital asset market. 1. Establishment of a proactive regulatory framework. The executive order titled Strengthening American Leadership in Digital Financial Technology marks a significant shift in the U.S. government's approach towards digital assets, contrasting sharply with the previous administration's focus on regulatory risk. The establishment of the President's Working Group on Digital Assets is a critical component as it signals a commitment to evaluate and propose modifications to existing regulations aiming to foster innovation and economic development in the digital asset sector. This proactive stance could lead to a more robust and supportive regulatory environment, which is essential for the sustainable growth of the crypto market. 2. Reversal of SAB 121. The repeal of the SEC's SAB 121 rule is a pivotal moment for the digital asset market. This rule previously required financial institutions to treat crypto assets as liabilities on their balance sheets, creating significant barriers for banks and other traditional financial institutions in offering custody and other services for digital assets. With its repeal, financial institutions are now encouraged to participate more actively in the crypto space, potentially unlocking billions of dollars in investments and facilitating broader adoption of digital assets. This change could lead to increased institutional involvement, further legitimizing the crypto market. 3. Market response and economic impact. Following the announcement of the executive order and the repeal of SAB 121, the cryptocurrency market experienced a significant surge, with Bitcoin prices reaching record highs. This immediate positive market reaction reflects the optimism and renewed investor confidence stemming from the Trump administration's pro-crypto policies. The anticipated $200 billion growth in the digital asset market highlights not only the economic potential of cryptocurrencies but also the broader implications for innovation in financial technology, payment systems, and economic development. 4. Concerns over regulatory integrity and market manipulation. While the changes have been largely welcomed by industry leaders, there are notable concerns regarding the integrity of the regulatory framework and the potential for market manipulation, particularly given Trump and his family's involvement in launching meme coins. Critics argue that this involvement could undermine the legitimacy of the entire crypto sector, raising questions about the motivations behind certain market actions. The emergence of meme coins associated with the Trump family has sparked skepticism and accusations of potential scams, which could lead to increased scrutiny and regulatory backlash if not addressed transparently. This highlights the delicate balance between promoting innovation and ensuring regulatory integrity in a rapidly evolving market. 1. The New Deal 1933. In response to the Great Depression, President Franklin D. Roosevelt implemented a series of economic programs known as the New Deal. This initiative aimed to provide relief for the unemployed, recovery of the economy, and reform of the financial system. Just as Trump's executive order signals a major shift in digital asset policy, the New Deal represented a significant transformation in American economic policy, prioritizing government intervention to stimulate recovery and growth. 2. The Glass-Steagall Act 1933. Enacted as part of the New Deal, the Glass-Steagall Act separated commercial banking from investment banking, aiming to reduce the risk of financial speculation. The act was a crucial response to the banking crises of the 1930s. Similarly, Trump's repeal of SAB 121 and the establishment of a new regulatory framework for digital assets can be seen as an attempt to reshape the financial landscape and promote innovation while addressing concerns related to regulation and investor protection. 3. The Dodd-Frank Act 2010. In the wake of the 2008 financial crisis, the Dodd-Frank Wall Street Reform and Consumer Protection Act was passed to promote financial stability and consumer protection by increasing regulations on financial institutions. This act, like Trump's executive order, marked a significant shift in regulatory approach, although in the opposite direction. While Dodd-Frank imposed stricter regulations, Trump's actions aimed to remove barriers for financial institutions in the digital asset space, reflecting a broader ideological divide regarding government intervention in markets. Future outlook: predictions for the crypto revolution under Trump's new order. In light of President Donald Trump's recent executive order aimed at revitalizing the U.S. digital asset market, the future of cryptocurrency in America appears poised for significant transformation and growth. The repeal of SAB 121 and the establishment of a regulatory framework signal a new era for digital assets, with several key predictions for the market's trajectory over the coming years. 1. Market expansion and valuation growth. The digital asset market, already on a growth trajectory, is predicted to exceed $200 billion in value as institutional adoption of cryptocurrencies becomes more prevalent. With Trump's administration advocating for clearer regulations and promoting dollar-backed stablecoins, traditional financial institutions are likely to invest more heavily in crypto assets. This influx of capital could lead to further appreciation in asset values, pushing Bitcoin and other cryptocurrencies to new heights. 2. Increased institutional participation. As financial institutions overcome the barriers previously imposed by SAB 121, we can anticipate a surge in participation from banks and investment firms in the digital asset space. The repeal of the accounting rule that classified crypto holdings as liabilities will facilitate the provision of custody services and financial products linked to digital assets. Major banks may begin offering crypto investment products and services, which could normalize cryptocurrency as an integral component of investment portfolios. 3. Regulatory clarity and innovation. The establishment of the President's Working Group on Digital Assets is expected to lead to a more structured regulatory environment. This group will likely create a comprehensive framework that balances innovation with consumer protection. As regulations become clearer, startups and established companies alike may feel empowered to innovate within the blockchain and cryptocurrency sectors, leading to the development of new financial products, decentralized finance, DeFi solutions, and enhanced blockchain technologies. 4. Stablecoins and digital dollar dynamics. Trump's emphasis on dollar-backed stablecoins will likely result in increased adoption and use of these assets for transactions and as a means of digital payment. The prohibition on a central bank digital currency (CBDC) may also spur private sector innovation in stablecoin offerings, as companies seek to fill the void left by a potential lack of government-backed digital currency. This could stimulate competition and diversify the stablecoin market, ultimately benefiting consumers. 5. Continued market volatility and speculation. While the regulatory changes may usher in a period of growth, the cryptocurrency market is inherently volatile. The speculative nature of cryptocurrencies will likely persist, with prices subject to rapid fluctuations based on market sentiment, regulatory developments, and macroeconomic factors. Investors may experience both significant gains and losses as the market adapts to the new regulatory landscape. 6. Public perception and legitimacy of cryptocurrency. The legitimacy of cryptocurrency as a viable financial asset is expected to improve, particularly among mainstream investors and institutions. However, the involvement of Trump and his family in launching meme coins could present challenges. Critics may argue that such actions undermine the credibility of the crypto sector and foster skepticism among traditional investors. How the administration addresses these concerns will be pivotal in shaping public perception. 7. Global competition and leadership in crypto innovation. With the U.S. actively pursuing a pro-crypto agenda, competition on the global stage is likely to intensify.
Countries that adopt restrictive measures may see a slowdown in innovation, while the US could emerge as a leader in blockchain and cryptocurrency innovation.
This may encourage other nations to rethink their regulatory stances, leading to a potential reshaping of the global digital asset landscape. 8. Potential for a national digital asset reserve. While Trump did not formally propose the establishment of a national digital asset reserve in his executive order, discussions around such a concept could gain traction. A strategic reserve of cryptocurrencies, particularly Bitcoin, could be seen as a way to bolster national economic security and enhance the US dollar's dominance in the global financial system.
This could open new avenues for asset management and economic strategy.
9. Risk of regulatory backlash and scams. Despite the positive outlook, the crypto space remains susceptible to scams and fraudulent schemes, particularly with the launch of new tokens. The administration's ability to enforce regulations and protect consumers will be critical in preventing potential abuses and building confidence in the market. The skepticism surrounding the Trump family's meme coins could serve as a cautionary tale,
emphasizing the need for robust consumer protection measures. Conclusion. The future of the cryptocurrency market in the U.S. following Trump's executive order and the repeal of SAB 121 is laden with both opportunities and challenges. An environment that fosters innovation while ensuring consumer protection could lead to a significant evolution within the digital asset landscape. As the market navigates these changes, stakeholders must remain vigilant and adaptable to maximize the benefits while mitigating risks associated with this rapidly evolving financial frontier.